The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Felix Moreno, keeping you up to date with expert opinion on precious metals and the markets.
Hello and welcome to the Gold Money Podcast. I'm Felix Moreno and I'm here today with Tuur the author of a well-known investing newsletter titled Macro Trends, and also the author of an excellent report titled The Gloom of Central Banking. Hello, Tuur.
Hello, Felix. Nice to be with you.
We're living in very interesting times. You write about bank holidays, capital controls, bond crashes, and currency devaluations as potential dangers in the horizon. Do you think any of these dangers are really imminent?
Well, I've been thinking about this for a long time, and I think in general we have to be aware of these kind of issues. If we live in a fractional reserve system, if we live in a system where banks can do credit expansion, so it's like it should be on any investor's radar at all times, I think. But I do think we are facing some imminent dangers, and I think the crux, the big change might occur when global financial policy starts making a shift from bailouts to bail-ins in the banks.
Yes, we've already seen the first bail-in in Cyprus, and it's not uncoincidental that it's happened in a German election year. And it seems that they've retracted somewhat, but they did say that Cyprus was going to be the blueprint for any future bailouts, now bail-ins in the European Union. Do you think that's going to happen?
Yeah, also, Bailin of, I believe, Citigroup talked about a template. We hear politicians also talking about the new type of policy, and it's quite easy to verify that this is actual financial policy when you look at the papers written specifically at the Financial Stability Board, which is recognized by the G20 as something like a financial government. They are the ones making the legislation, and so you can read that already in 2011 they were writing about this new policy that would replace too big to fail, and that's called the Bailin resolutions. And a resolution, what it means is a structured default of a bank. It's very different from a bailout, which is basically just keeping a bank alive by giving it just enough to survive for a while.
In fact, people in Europe are a bit confused, in my opinion. They still think that the money they have in a deposit at a bank, in a current account, belongs to them. In European legislation, money held at the bank, at least under our current system, belongs to the bank, and it's a liability of the bank that they have to repay the depositors, but it's not something that they hold in custody.
No, exactly, and this is there's jurisprudence going back to the 19th century that confirms this, and so that proves that yes, this fractional reserve banking is really embedded very deeply into the system, and in that structure, the depositor is worst off whenever there's a bankruptcy, and whenever the policy makers decide that they don't want systemic disruption, which is exactly what the Financial Stability Board is saying. They don't want contagion. They don't want this systemic disruption. Then the easiest persons to abuse, so to speak, is the depositor. So they will be wiped out, I believe, in the end, just like we saw happen in so many crises before this, but right now also in Cyprus.
Well, in some countries, in Cyprus, the deposits were particularly worried because there weren't that many bondholders to take a hit. But in other countries like Spain or Portugal or even France, there are quite a large amount of outstanding bonds that bail-ins could target before they hit depositors.
Yeah, that's the thing, that you don't know, like how hot or how much hotness and how much coldness do these policymakers want to blow before they make their actual decisions. I mean, obviously, they want to keep people, the population, they want to keep savers calm to retain the trust in the system. So they'll have this rhetoric that they will wipe out the bonds first. But of course, what would happen if they would wipe out the bondholders is that we get systemic disruption. We get a domino effect. We get other banks that run into trouble. How did the Cypriot banks run into trouble? A part of that was the fact that they were holding Greek bonds. So
exactly,
what will happen if we wipe out Spanish bond, for example? I don't know. I think a lot of.
I can tell you one direct effect. The Spanish pension fund, the public pension fund, is currently 97% invested in Spanish sovereign bonds. So the repercussions would be fairly large.
Yeah, no, it's like in a way they are by keeping on postponing the inevitable, they're making the eventual collapse all the worse. We're seeing this like under the table nationalization of pension funds, and that means that once the bond collapse does come, that the avalanche will be all the greater, and the pension holders, maybe if in a system where they would hold some stocks or some other assets, they would have at least something left. But if you're 97% in invested in the promises of basically an insolvent government, then I don't think there's going to be anything left.
Nevertheless, the question of timing is always important. And right now we're seeing monetary expansion really kicking into high gear in both the US with QE forever and also in Japan. Japan's promised to achieve inflation at all costs. Do you think that these two currencies are in more danger than the euro, for instance?
Yeah, it's hard to say. I think my thinking has always been that the U.S. dollar would be one of the later ones to face a demise because it's the world reserve currency, because they can export a lot of debt still, despite of course the Asian resistance against this lately. And then before that, is it going to be the British pound? Is it going to be the yen? Is it going to be the euro? I think that what we see now with the yen, with the interest rates on 10-year government bonds going up from 0.5% to 1%, I think this may be the start of a global phenomenon whereby we see the rise of these generation low interest rates. So in that sense, maybe the yen, maybe it will be the first one to go. Also because it seems like they're increasingly isolated, whereas it seems that the UK perhaps is more connected, and because a crash of the UK might have much larger reverberations throughout the West than maybe a crash of Japan. So maybe there's less goodwill left to try and save the yen, because what usually happens with right before a devaluation is that the central bank starts noticing that they don't have enough foreign currencies to keep on defending the value of the national currency. That's what happened, for example, in the USSR in the late 90s. They didn't have any dollars left in the treasury, and so they couldn't defend the par or the float of the
parity
ruble against the dollar. So eventually they did get some kind of bailout, but it wasn't enough, and there was a panic, and then they just had to devalue, and then you get hyperinflation. So my hunch would be that the Japan would be first, perhaps.
I don't know if I agree with you that Japan would be first, but I agree with you completely that the US dollar will probably be the last one to fall, because inertia, momentum is such a big force in human events that it really takes people a lot to wake up to the idea, to realize that things have changed, and that the US dollar is no longer either linked to gold as it was before 1971, or backed by sound central banking, if there can be such a thing.
Right, and so many people in so many countries are using the dollar as some kind of gold standard. For them, it's a lot better than their national currency, like in Latin America and in other parts of the world. So a lot would have to happen before people start distrusting their dollar, and often it's dollar notes. Often it's cash dollars. And so
I imagine that
you said that you see you would rather see the euro decline or fall apart before the yen goes because the yen is already devalued. As far as I know, it's about 13% from January to now.
Well, it's not a matter of preference. You understand that?
Sure.
I would rather not see the euro fall. I'm just saying that the dangers of it falling. I'm not so sure that the euro or even the British pound are going to be later to the race than Japan, but
right.
We'll see.
Right.
So moving to the solutions, as I like to call it. First, the immediate solutions. How do people protect themselves from all this turmoil? And then eventually the final, not the final, but the solutions to actually provide an alternative which is not so unstable as the current system. So I imagine you advise your newsletter readers to invest in precious metals.
Yeah, absolutely. Because my thinking is that in a scenario of a meltdown, if you look back in history, what are the asset classes that perform best? Those are the asset classes that are most liquid. People are panicking. They're afraid of further capital controls. So they want something that's easily saleable in an international context. They want something that because they don't know what tomorrow is going to bring. So they want something that can be easily divided into different pieces. So you can maybe sell a little piece, and that's sometimes problematic with real estate, for example. So liquidity is very important. But then, of course, you want to be careful not to be trapped in the local currency because that's obviously going to take a hit. And then also, I think what people look for is they avoid third-party risk because there's a big risk of bankruptcies in local companies, in banks, and also in governments. So it's tricky to invest in the promises of a third party. And that's why people tend to gravitate historically towards precious metals. And so, it is still an important part of my own savings, and I keep recommending it. And then, of course, I think Bitcoin is also a very interesting investment in that regard because it has some qualities that even supersede those of gold, especially in terms of flexibility, liquidity, the fact that it's non-geographical, those kind of things. So I'm very, very strongly recommending and investing myself in hard money.
I agree with you, as you know, about both gold, which truly has no counterparty risk, and also about Bitcoin. Nevertheless, I'm still very wary of. I have some Bitcoins myself, but I'm very wary of recommending it because it's still very experimental. It's growing very fast, but it's still a very small space.
Right. No, that's absolutely true. I mean, it was the protocol was first introduced to the world in 2009, and that's like 4 years ago. So obviously it is very, very young. On the other hand, you could say that a lot of hackers have looked into it, and the prize money has gone up substantially. I mean, there's Bitcoin accounts that have way over $10 million worth of Bitcoin. So any hacker out there that is willing to give it a go has had a chance by now. So I think the protocol has proven itself to be resilient, to be strong. And also the potential upside is enormous. So that's why I think I don't have a problem recommending it. I don't recommend people going all into Bitcoin, but I think that even a small investment in Bitcoin can have very substantial rewards. Like the subscribers that followed my advice and the ones that put in, say, 1% of their assets into Bitcoin when I recommended it in January 2012, well, they have now around 25%. It's risen over 20-fold. Mm-hmm. And the risk was very, very low. And I think because we're in a parabolic uptrend in the price, I think there's similar upside potential for people that invest maybe just 1% today.
Right. So I see that you're being more conservative than I thought. You are, as I am, very, very optimistic about the potential of Bitcoin, but obviously it's not something you should put your life savings into right now.
Well,
there are still many risks.
I would recommend that, but I would say, like, depending on your own risk profile, I would say somewhere between 1% and 10%. And maybe the younger you are, maybe the more you want to expose yourself to this technology, because I really think that cryptocurrencies are here to stay, and then it's only a matter of time to figure out, well, is it going to be Bitcoin or is it going to be another one? But I think there's a whole community that's extremely active around Bitcoin, so I don't see it die from one day to another. If you look at where the Bitcoin nodes are geographically, they're all over the globe. People are running this program. We're talking about multiple hundred thousands of people. So I really don't see it die very quickly. And that's why I feel more comfortable in Bitcoin than in a lot of other, well, I wouldn't say other, but let's say in a lot of other virtual currencies. And with that, I mean specifically the fiat currencies.
Exactly, because let's go a bit into the detail of it. You've already talked about fractional reserve banking, but please explain how Bitcoin is different from central bank-controlled monopoly fiat money.
Right. Well, you've kind of said it in a way in asking me about the contrast, because it's not centrally controlled. Bitcoin is just a protocol. You install it on your computer if you want to, or you make use of the network by just buying some, and then whenever you're selling some, you will connect to the network, and then that transaction is distributed, and everybody will take note of what's happening. So it's not central. The European Central Bank, they've also explicitly admitted this, that there are no assets to be confiscated. There are no assets to be controlled with which they can take over the control of the network. Different from, for example, e-gold, what we saw in the early 2000s. Somebody that tried to back a virtual currency by gold, his assets got confiscated. So the big strength of Bitcoin is exactly that. What a lot of people are worried about, namely the fact that it's not backed by something physical.
Exactly. That's a very important factor. But also, in your report, The Gloom of Central Banking, you explain that central bank and central banking systems, they have a purpose. There's a reason why they're set up. And they're not set up because it's the most logical way to manage money or to make money exist. They're set up because they benefit people. How does fiat money benefit certain groups at the expense of others?
Right, yeah. Central banking, I mean, always if you want to understand the purpose of an institution, I think it's important to look back into history and to see, well, why did it emerge and what was the reasoning behind the people that started this institution. And so when I look at central banking, I see kind of three important functions that it tends to have. First of all, it's the defense of the monopoly of fiat money. And fiat money, what it means is the ECB defines it themselves as any legal tender designated and issued by a central authority. So basically, they're defending the national currency. Also, the function of central banking is to kind of keep the fractional reserve banking system going, because the central bank is always known as the lender of last resort. Whenever there's a bank that gets into trouble because they can't keep their promises, they can always go to the sugar daddy, so to speak, and ask for a bailout. That has always been the function of central banks. And then finally, also, what it does is it institutionalizes seigniorage. And seigniorage basically, originally it was defined as, well, the king said, I've kind of monopolized this mint. I'm now minting my own coin. But there's some costs involved with that, and I need to be reimbursed. I need some to get some money back. That was the original excuse. But basically, what it is money printing. It's the privilege that the king had, and now the central banks have to create money out of thin air to fund their own operations, but then also to do a lot more. And obviously, governments are very interested in this practice. And funnily enough, that was exactly what worried central banks initially about the emergence of new e-money, new virtual currency in the marketplace. They were worried that their own seigniorage revenues, their own money printing revenues would be diminished.
Yeah, so basically the main beneficiaries of fiat money are banks who receive the bailouts and governments who receive cheap funding and basically can institute a tax on money. But who pays? Who's the one? Who are the people most hurt by this?
Well, it's the savers. However you look at it, it's people that put money in the bank. They have the risk that their bank will not be bailed out and will go bankrupt. They have fiat money, even if when it's under their mattress and not in the bank, they're subject to inflation tax. So however you look at it, it's the people that are on the bottom of the financial chain of money. They're the ones that are the last ones to receive the fiat money. They experience most of the inflation at the benefit of the people that are the first ones to receive the fresh money coming from the central bank. And those are the private banks, the governments, because they get fiat money in return for bonds that they sell to central banks. Just look at the balance sheets of central banks. They're exploding. They're full. They're stuffed with these government bonds, basically promises from governments. And that's what I think is so exciting about Bitcoin, also about gold, is that it's money that rewards saving. So for the first time, we have people that have, specifically with Bitcoin, you see that the young people that get involved, they're incredibly motivated to start saving and to build something for themselves, and maybe to later start a business or build a factory, and that's how the economy is going to be rebuilt. It's not going to be rebuilt by people going deeper and deeper into debt.
Exactly. Savings and capital accumulation. You've just come back from Argentina, where we were recently, and there the dangers of fiat money were especially graphic. Can you tell us a bit about how people there on the streets suffer from runaway inflation and things like this?
It's a tragedy. And it's been going on for a while, but it's becoming increasingly difficult since the most harsh capital controls started kicking in early 2012, and on a daily basis, what people are seeing is that they are completely not rewarded for saving. So they try to get rid of their money. The farmers, for example, Argentina is a powerhouse for soybeans specifically. So the farmers were actually making a lot of money despite the taxes. The taxes are very high on farming. And so they've been trying to hide their savings into the local market. They couldn't do it in fiat, so they decided to buy real estate. And that's why real estate prices, despite the economy not being very well, have risen a lot. And what we're seeing now is that the real estate market is freezing up. So a lot of people that have put their own savings into real estate are now, also because they're losing jobs. So they're now thinking about selling their house, but then they're no longer allowed to sell their house for US dollars. And so it's kind of a conundrum. They're stuck. A lot of people are stuck in Argentina, and are just waiting, in fact, for this whole situation to resolve, for maybe once more the government admitting that they cannot pay their bills and they have to perform some type of austerity, because the government now is very socialistic and they try to please the poor people by all kinds of subsidy programs, and this has to stop. Obviously, the government has to shrink for some new oxygen to come in. But while that all is happening, what we're seeing is that quite a number of local people, young people, are now discovering Bitcoin, and they're seeing that they can actually produce services that they can sell outside the country and be paid in Bitcoin without even having any problem related to capital controls, and that's very inspiring.
Exactly, I think. they can suddenly be part of the global economy, exactly. Not have to worry. At least they can if they have any skills that they can sell online, they can work for Bitcoin, and that's very liberating. That's one of the things that makes Bitcoin so exciting. That it can open so many doors to so many people.
Right, right. And what you see happen, and that was also apparent at the conference in Silicon Valley, is that my impression is that some of the people that understand this the earliest, that are the first ones to kind of grasp what it means and kind of see the potential and the future and get really excited by it, are people that have always or that have grown up in economies that are sort of at the fringe, that are not in the West, so to speak, not Western Europe, not United States, but rather people from Argentina, Mexico, people from Eastern Europe that have had a lot of hardship in the 90s and earlier. They're the first ones to get it. And because the barrier of entry is so low with Bitcoin, they're actually, quite a number of them are actually the ones that are building successful companies, that are involved in Bitcoin mining, that are the first ones to start building up this infrastructure that's needed to make Bitcoin even more accessible to the general population.
Exactly, because for instance, in the United States, you can buy Bitcoin at I think 700,000 locations with cash, but that's not possible in Europe yet.
Not that I know. No, it's a bit more fragmented. The scene in Europe. There is Bitcoin.de. They're doing a good job getting buyers and sellers in touch with each other. There's Bitstamp, who's active in Slovenia. That's doing a great job in helping people buy Bitcoins. But now, I mean, there's technology that can be deployed globally. There's people working on payments, Bitcoin payments with cell phones. So via SMS, for example, there is Bitcoin ATMs. There's Bitcoin vending machines. So there's a lot of technology that can be deployed globally, and I think we'll see that happen over time. It's a bit, the question is a bit, how are the regulators going to deal with it? And,
exactly. I wanted to get to that. Because obviously in your report you referenced that ECB report on virtual currency schemes, and one of the main questions in our mind, both for gold and for Bitcoin and for anything that defies the fiat money monopoly, is how are the monopolists, how are the central bankers going to react? Are they going to allow us to try and save a bit of our money, or are they going to try and ban it all? And if they do, how are they going to do it? And you mentioned before e-gold. We've also seen the Liberty Reserve closed down recently, and we saw the Liberty Dollar closed a few years ago. Do you think that Bitcoin is going to be able to withstand these kinds of attacks?
Well, I think a great analogy and a great lesson for everybody involved is to look at what happened with file exchange over the internet. We saw it as a trend in the early 2000s start emerge. There were some companies that became famous and much used, like Napster, for example. And there was a big witch hunt to go after these companies, and a lot of them did actually have to stop doing business, but that only challenged the market to come up with solutions that were more decentralized, more discrete. And what you see today is that despite the whole witch hunt and despite all the threats and the prosecutions, 10% of the internet traffic is torrents. So it is the file exchange that the government have been trying to eradicate. 10% of the global internet traffic is actually exactly this. So I think something similar can happen with Bitcoin, in that, of course, people will be afraid in the beginning when they start going after Mt. Gox, which I think in a kind of covert way already happening, when they start going after specifically the exchanges, because that's, it's any transaction in a Bitcoin exchange is 50% involved with the traditional banking system, and that's controlled by the authorities. So it's obvious that this is, and that's also what they say in the ECB report, this is the most likely place to start regulating and controlling. But I think they do realize that they can't. What would happen is you'd get the Barbara Streisand effect, when the government would say, we don't want anyone to use Bitcoin anywhere. And by the way, people always talk about the government, but we have 200 governments in the world, and they have all different incentives and different motivations and different grudges. So if the US government would come out and say, we don't want anyone to use Bitcoin, maybe China will come to the fore and say, "Oh, come to us, we love it," or whatever. And in any way, I think the Barbra Streisand effect would play, and that's, I don't know if you're familiar, but when there was a picture coming online, published online somewhere, of Barbra Streisand's own personal home, she started litigating and she started demanding that this picture be taken down. And the result was only that the entire internet knew about this story and saw the picture. So she achieved exactly the opposite of what she's trying to do. So what I think is actually happening now is we see authorities trying to create a bad aftertaste for Bitcoin. They try to associate it with maybe pornography or piracy or crime or gambling, and in that way they're trying to dissuade people from buying it. And I think that's probably the best.
How is that going to dissuade? How is that going to dissuade people from using it? I think online gambling has been banned in the States for several years now, and I don't see anybody who likes that kind of stuff stopping from doing it just because the government says. It reminds me so much of alcohol prohibition in the 1920s. It's trying to change the laws of human nature through an edict, through a government decree. Just seems so misled, seems so unwise.
Yeah, no, absolutely, and of course, the U.S. government managed to kind of limit the accessibility of alcohol at the time, but of course the price went up. So there was a huge incentive for all kinds of système D, black market entrepreneurs to produce and to provide anyway. So I think the best governments can do is to drive it underground, and that will drive up the price more. But I don't see happen at all that Bitcoin will be kind of banned globally, because look at what the BRIC countries are trying to do.
Even if it was, can it be closed down?
No, I don't think so. It's a protocol. It's like to say we're going to abolish English. We don't want anybody to talk English anymore. And of course, you can say that you're going to, give people the capital punishment if they're caught talking English. But there's a limit to how much force the government can deploy, especially in a situation where I think we're going to go towards, which is banks that are closing, currency devaluations. What we see happen in those kind of situations is the governments become weak. They become weak because they lack resources to pay the army of bureaucrats that they're governing, and so there is a limit to how much, because when government workers starts to be paid out very unreliably, maybe they're getting less and less wage in terms of purchasing power, they become very bribable, and then you see that the black market starts to come to the fore and starts to grow a lot, and so of course Bitcoin fits, and I'm not saying that that's the only function Bitcoin can have, but I think if it would be pushed to the limit, Bitcoin could function as a gray market currency perfectly.
Nevertheless, I hope that there are a few governments enlightened enough to try and harness the technological revolution.
Yeah,
and,
I think there will be.
And think of the future instead of trying to block it out. As I agree with you, it can't be stopped. It's like free speech. You can try and ban the printing press as much as you want, but once people realize that they can write whatever they want online, they can talk to each other all over the world, it's very difficult to shut it down. You have to become North Korea, or to take another example, if you want to ban the English language, you'd have to institute a sort of 1984 type regime in which you have newspeak and have people censoring every single thing that's written everywhere and trying to force people into a certain mold. It's very hard to do. I've always thought that technological people are very, very hard to enslave.
Right.
And I think Bitcoin is just a symptom of that. And the Arab revolutions, Twitter, social media, just shows that, you can't control people once they have enough means to communicate and to
and also it's just too cool, I mean, it's just once you start using Bitcoin, it's just too much fun and you just don't want to let go. I mean, there's a kind of a fun factor and a kind of like ease of doing things. Like once you start using email, you don't want to go back and write all your, kachung and get the copy machine to reproduce if you want to send a message to many people and pay all the stamps and whatnot. Yeah. So I think there's really like it's hard, and also it's very hard for the current authorities to regain the moral high ground after what we saw happen in 2008 already. We've seen all these egregious financial crimes. Basically, they're not being prosecuted, and they're all these bonuses are still, so the profits are privatized and the costs are socialized, and the population is kind of like there's an inertia, but still people know what's going on, and so it's going to be very hard for these authorities to regain the moral high ground and to say, oh, Bitcoin is evil because look at these hackers and they're sending money across the globe and who knows what they're doing. And so I really think that it's going to be a very, very hard story to sell. And that's what politicians always have to do. They have to sell a story that's somehow believable. And then they can try and steer evolutions a little bit. But I don't know. I think this is too exciting. And also I think the young generation, that once they get... once they're used to Bitcoin, they won't go back. They won't want to go back to the old, very expensive, very bureaucratic, very slow way of doing banking. If you look at it now from the perspective of Bitcoin, then you realize how incredibly bureaucratic and slow it is, even if it functions.
Exactly. So on that very optimistic point, because I see that you're very excited as I am about the future of gold, the future of cryptocurrencies, and the future of freedom, after all, because it's freedom of speech and being able to control your own life and your own property that will probably make the world a much better place, even if we're going to live through some very hard times at the moment.
Right, absolutely, and I think what Bitcoin does is it removes the fear from the first mover, because the first mover that does something new with finance always gets cracked down on or frowned upon or is being threatened. But because you can have this discretion, people can make the first move and not feel the fear. And that way we're seeing this wave of enthusiasm, and it has nothing to do with people wanting to be disingenuous or wanting to commit crimes. It's all about personal freedom.
Right, Tuur. So we're going to have to leave it here, running out of time, but I'd absolutely love to have you back on, because I think we have so much more to talk about. So I'm just going to say goodbye, and thank you very much for coming to the Gold Money podcast, Tuur.
You're welcome. I look forward to the next talk.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.